Thank you for tuning in. Our next presenter is Chris Dobbin, President and CEO with Nova Leap Health. Mr. Dobbin, you may begin.
Great. Thanks, Taryn. Welcome, everybody. Again, as Taryn mentioned, my name is Chris Dobbin, President and CEO of Nova Leap Health Corp. We are a small home care services business trading on the TSX Venture exchange. A couple housekeeping items. One, you can find our investor deck on our website at novaleaphealth.com. You can also subscribe to our newsletter and press releases as we put those out on a regular basis. And two, we'll have some forward-looking statements. Again, you can refer back to the exact wording on the presentation, which again could be uploaded or downloaded from our website. I'd say I have two objectives as part of the presentation today. One, for those that are current investors that are attending the call, I hope that by the end of this you'll see that the reason that you initially invested remains the reason, whether that's your own sort of personal thesis. But I think if anything, for those that know this story and know our company, one of the things we've been very good at is being very consistent over the years. And two, for those that are new, for those that are perhaps hearing about us for the first time, I hope what you'll find is that we're a small company with an enormous amount of potential, and so I'll try to wrap those two things up towards the end of the presentation. So quickly about our history. I started this company back about 5 years ago, really based on a personal family experience where I saw the benefit of home care and just saw what I believe to be a large opportunity in a very fragmented market, particularly in the U.S. and Canada. And we've been growing quite rapidly, as I'll show in some of the slides here, really for the last 3 years. It was really about 3 years ago, again, towards the tail end of 2017, when we really began a fairly aggressive acquisition program. But before I get into how we performed over those last 3 years, maybe I'll start with, what do we do? So Nova Leap is a home care services organization, and oftentimes people will hear home care or home health care and wonder what the difference is between the two. So we are primarily a home care company, and what that means is that most of the work we do within the home is non-medical in nature. So, and we would have upwards of 70-75%, depending on our agency, of our clients living with a form of dementia. And so home care could be dementia care, transportation, errands like housekeeping, meal prep, doctor's visits, mobility issues, personal grooming, those types of things where you think about anyone, you think about your parents or grandparents or aunts and uncles or a spouse or somebody that you know that needs some form of support within the home. It could be dementia. It could be an individual coming out with hip or knee surgery from a hospital, needs some short-term assistance. Lots of different reasons. But predominant factor is that usually when someone attains the age of 65, they have at least one chronic condition, a long-term health condition. And that's generally what's leading to home care. And that's the type of support that we provide. We do provide some home health care, which is typically what we consider like a med-poor pain management, perhaps end-of-life, palliative care situations. And those are usually done through our nurses, whether a licensed practical nurse or registered nurse, depending on the state or province in which we operate. I think it's important to know that the type of business that we run is predominantly a private pay business. So what that means is that we bill our clients on an hourly basis, and they pay us out of pocket for the most part. The two exceptions to that would be the two types of programs that are funded by third parties. One is Veteran Affairs, which is a government-sponsored program, and the other would be long-term care insurance. So think about Nova Leap primarily as a home care company that's predominantly private pay. That's really what we are. So what does the industry look like? I'll just say that this is really driven by demographics. I think everybody understands or heard the fact that in the U.S. particularly, you get about 10,000 people each day attaining the age of 65 based on demographics. Obviously, that's a number that's going to continue to grow over time. The home healthcare industry itself has been growing quite rapidly over the last several years, and will continue going forward, again, just based on demographics. And, we're after right now a tiny slice of that, roughly 7%, which happens to be the home care side of things, predominantly on the private pay and non-government sponsored programs. What's driving the opportunity, again, is demographics. The fact that we have individuals that have at least one chronic condition, usually after they attain the age of 65, as I mentioned earlier. So I'm not going to spend a lot of time on this. We'll get into briefly. We do have a fairly significant focus on dementia care. And again, depending on which agency, we'd be looking at, we'd have upwards of 70 or 75% of our clients that will live with a form of dementia. And so that is definitely an area of focus, an area that we've spent a lot of training and investment training on, and then one that we'll continue to invest pretty heavily in the coming years. So what's our growth strategy? Before we get into sort of how we've done, what are we looking to do? There's really three ways, I think, for us to grow. One's organically. And so as we enter into a state or into an area that we like, we do look at growing into other areas within that state. And that could be, for example, opening a new office location. So we did that in Ohio this past April. And I think organic growth for us in terms of these opening brand new office locations going forward will become a larger part of our business. The second strategy, and the one that certainly is the one we've followed predominantly over the last few years, has been by way of acquisition. We've done a number of those, I think 12 or 13 in total thus far, and that's certainly been the largest driver of our growth, and I think will continue to be a fairly significant driver of our growth going forward. The third is joint venture partners. We're always looking and having conversations with folks around opportunities to partner, whether it could be a technology company or other types of service providers that could make sense given our client base. It's not an area that we've entered into any contracts at this particular point, but we're always looking for opportunities on that side. So how have we done? Again, back in 2016 is technically when we started the company. We went through the CPC program in Canada, for those that are familiar with that process. I always get the question, why did you go public so early when it was really the concept stage? And my belief was that the opportunity is so significant, and I saw such a fragmented market that I wanted people to get in and out of the stock as they saw fit based on management's performance. And so, the permanent nature of capital public markets is attractive. The fact that people can get in or exit as they see fit, I think, was attractive. I've invested in enough private businesses of my own to know that typically in a private setting, the only way to exit a position is by way of an M&A transaction. And so we just felt comfortable that given the opportunity that's ahead of us, that the public markets would be the way to go for us. So we've grown pretty significantly over the last 2 years. Again, still a small publicly traded company, but our growth is fairly substantial. So we do report in U.S. dollars. Back in 2016, we had $40,000 of revenue. In 2019, we had $17 million. We're trending higher than that for 2021, based on those that have been following our quarterly reports. So how does that look like on a quarterly basis? Pretty steady incremental changes. Again, you go back to Q4 of 16 all the way to Q3 2020. We did take a bit of a dip towards the end of Q1 and Q2 before seeing a rebound in Q3, and that was a result of COVID. We started to experience a little bit of softness in a couple of the areas we operated in. And again, we dealt with that, I think, pretty well, and I'm pretty proud of the team that we have in place that is through that process. How is that translated from an EBIT perspective? And again, our business is really a service-based business. We have no CapEx to speak of at all. So EBITDA is a good proxy for our performance in this particular type of business. Again, back in 2016, when we started, negative EBITDA, as you imagine, was ramped up as we invested in people and technology processes and looked to invest for growth in the coming years. And I think our trajectory has been pretty good over the last few years. How has that looked on a quarterly basis? Again, I compare this pretty similar to a stock chart. In many instances, we've had some pretty solid growth from quarter to quarter, and then some pullbacks as we've invested in in people, and again, towards part of 2020, we saw the impact of COVID. But I'm pretty comfortable with the performance that we've had over the last few years. So where are we and where we plan to go? If there's one takeaway from this presentation, one slide to look at, this is the one I think it would be. This map really, I have this up in my office. It's really, if you take a look at what we've done in the last 3 years, I think it's pretty significant. And what's striking to me on this map is where we are not, and that I think in itself represents the opportunity that lies ahead of us. So we do have 3 locations up in Nova Scotia. We operate throughout New England, so Vermont, New Hampshire, Rhode Island, and Massachusetts. Moving down towards a little bit southwest, we have a couple locations in Ohio. I expect we'll just consolidate that in one office. Those are 2 locations with 30 minutes apart. We just actually had a startup in April, as I mentioned, but we just actually bought a business, I think, a day after Christmas in Ohio. And so I expect that we'll just have 1 location there servicing that area. Further down into South Central U.S., we have Arkansas, which we closed on back in September. And in Oklahoma, we got a couple locations which we closed on in October of 2019. So again, quite a bit of growth over the last few years, particularly the last 3 years in particular. But again, this map to me really represents where we're not, and that's the opportunity I think that lies ahead of us. So, if you believe as an investor that we perform well over the last few years, but that we're really just reaching a certain scale within our business, and that we continue to buy these businesses at attractive valuations, and we can continue to execute as we have from an operational perspective, I think there's a fairly significant opportunity that lies ahead of us, and that's what I'm certainly most excited about. So what do we look for in businesses? We've been buying really, really small businesses. I mean, they certainly meet the definition of mom-and-pop businesses. The revenue typically acquired has been between $1 to roughly $3.2 million, so very, very small. And given our track record where we started, we've been pretty comfortable buying those businesses. We think we can get a high return on our invested capital. We're generally paying pretty reasonable multiples for those businesses. If you were to go back to the history of our acquisitions, they're pretty consistent, both in terms of what we paid for the business, but also in terms of how we've acquired those businesses. We've got a bank that's provided financing. We've had a combination of vendor take-backs or earn-outs. In one case, we did issue shares as treasury. But again, if you were to go back through our history, pretty consistent in terms of how we've made our acquisitions. We are looking for cash flow positive businesses. Typically, there's a 10 to 15-year track record, normally in a rural area, not in a large urban center. And generally what's been important to us, what is important to us, is that there's a good operating team in place. So this has traditionally been a succession plan for an owner that, again, has founded the business 10 to 15 years ago, was looking for an exit. And there's a good operating team in place. So that's an office team in place that will continue to run that business on a day-to-day perspective. And generally would have, 70 to 75 caregivers out in the field in people's homes. So that's what a business would look like to us. Now, I do get the question quite often, can Nova Leap acquire larger businesses? And are there a lot of businesses to be acquired in the coming years? And my answer to that is yes on both. We have looked at larger businesses that, for different reasons, they haven't been the right fit for us, but they are there. We also have the ability, both the ability and the capacity within the existing team to acquire more businesses than we have in the past. And our history, for those that don't know it, we acquired 2 in 2017, 5 in 2018, 3 in 2019, 3 in 2020. And so we've averaged around that sort of 3-ish number per year. We certainly have both the skill set and the capacity on the existing team to acquire more businesses. And we'll do that if we think those businesses are the right acquisitions for us. I won't spend too much time on the management team and the board, but we've got I think a great team both in the U.S. and in Canada. I've got a great board that has a combination of both public company, entrepreneurial, and M&A experience, which has been fantastic. Our cap table, roughly 66 million shares outstanding. We do have some options that have been primarily allocated to the board, our executive team, and our operators and key personnel, both in Canada and the U.S. We're supported by the Bank of Montreal on the banking side. We have some convertible debt that we raised both in December 2019 and January 2020. We have 38% insider ownership. I think insiders, maybe with the exception of one round, have led every single financing we've had in the past, and so have been consistent participants. Pretty comfortable with both the team, all around, and the investors that we have. From a comp perspective, we're generally following the larger public companies in the U.S., the Medicis, LHC Group, and Addis. These are companies that are slightly different than us in terms of not just focusing on private pay. They're very much on the government-funded programs, so home health, hospice, both Medicare, Medicaid. But what's interesting to me, and I'll take Medicis as an example, for those that truly look at investment over the long term, right? So not necessarily the shorter term traders, but are truly looking for a longer term investment. I look at a Medicis and I go back 20 years. I mean, they were a dollar stock, dollar per share. I think today they're very close to $300. And I think our model is very similar. We're really looking at acquiring smaller businesses. They produce cash flow. We look to take that cash flow and put that either to an organic expansion or into another acquisition, and just really keep repeating that process. And I think as long as we continue to execute at the operational level, we're definitely going to continue to see acquisition opportunities. But I think we have a long runway for this company. I think we'll have some pretty strong performance in the coming years. I'll end there. Maybe with some following comments. One, from my perspective, when I started the company again back in 2016, I sort of looked to where we are now and what's unfolded, with COVID in particular, and where we operate. And what I mean by that is where we operate within a home setting where people are already in an area they want to be in, and they're not necessarily sharing, common spaces like they otherwise in a larger facility. I think we, in the home care, the in-home care industry, we're in it at the right time. So right industry, right time is really my belief. The market continues to be very, very fragmented. I mean, there are literally thousands of these small businesses that I think in the coming years that will be transitioned out as part of M&A. And I think Nova Leap is very well positioned within the market that we're after. I do get the question quite often, do we compete against others? We certainly don't compete for acquisition opportunities against the larger public companies. It's just the businesses we're after are just too small. They're typically too small for private equity firms. And so we're generally competing against perhaps a local company that's in the market, or someone that may otherwise look at a franchise situation that may want to buy an independent business. So I think there's a lot of opportunities in front of us going forward. So right time, right industry, a long runway for many, many years to come. For those that know me, you've heard me say this in the past. I don't believe we could ever run out of acquisition or expansion opportunities during my lifetime. I believe that. And certainly we're not going to see a peak of the demographic trend for another 30 years. And I think this is a 50-year run. And so when you think about that from a long perspective, at least when I think about that, I think the opportunity for this company is tremendous. And along those lines, we take the long view. I started this company. It was interesting going around chatting with folks, seeing who may have an interest in the investment opportunity. I think I was struck by the fact that a lot of people weren't used to hearing that there's sort of this 10-year plan, and then year 5 it continues to another 10-year plan. And I certainly take the long view of this company. When I started the company, I had a very long-term view. I believe in what we're doing. I believe in the people that we have. I've been fortunate to work with an awful lot of great people both in Canada and the U.S. So I've had a lot of fun doing this over the last few years. This is a long-term investment for me. And so I think what I'm trying to do is attract people that also share that vision. And so, people that want to trade the stock are obviously welcome to do that. But those that really buy into the vision, I think, are those that I'm looking for as investment partners going forward. So I'll end with that, and happy to take any questions that may pop up. Okay, first question, where can I find the slide deck? The slide deck is on NovaLeapHealth.com. It's our website. Go to the investor section, and the deck is there. We keep it updated on a fairly regular basis. Okay, hi, Mr. Dobbin. Nova Leap acquisition targets are using a range of $1 to $3 million in revenue. I'd like to pick your thoughts on larger opportunities. Are there any? Are they located closer to a big city? Are they focused on private pay rather than Medicaid or Medicare? Yeah, so yes, there are larger opportunities that are beyond the $1 to $3 million. Again, we've looked at those types of opportunities. Again, just haven't had the right fit, but they are there. Some of them would be closer to urban centers for sure, but not all of them, not all the ones that we've seen. But again, there are a combination of either more opportunities for us or larger in nature. So the answer to those questions are yes. Are they private pay rather than Medicare or Medicaid? Yes. Again, we've looked at those types of transactions that are on a private pay basis, very similar to the nature of the companies that we acquired. What's the turnover in staff? Do you need to replace staff on a regular basis? Yeah, great question. So staff, this is, I would say, a higher turnover type business at the caregiver level, so those providing service within the home. That's the nature of our industry. Very little turnover at the operational level, meaning within the actual offices and the areas we operate. And so what's key to us really is matching up a caregiver with the family that we provide. Okay, so meaning that if someone has dementia and they're perhaps a difficult situation to deal with, then we have to have a caregiver that has experience in those types of situations. And they may have their own experience, and we overlay that with the training program that we have, and I think that ends up being a good fit. But that's our job, is to make sure that we have the right fit. And so I think when we do that and when we give the caregivers the hours that they're looking for, we find the right fit, and they tend to stay. But in general, across the industry, I think that's probably one of the biggest challenges is the turnover of staff. So that's part of the industry. It always has been, and I think that'll likely continue going forward. M&A, do you retain the seller? Who is often the operator? How do you incentivize those to stay? Yeah, great question. So we generally do not keep the seller. And it's interesting, I think there's a view out there that if a seller leaves, what's left of the business? And really you have a seller here that's looking for an exit strategy. And so we're actually not trying to keep the seller. That individual has made a decision to exit the business because he or she is looking at retirement. And so, again, what's important to us is really the operating team that's in place. Is there a nurse there? Is there a good scheduler? Is there someone with a geriatric care background? Is there someone that has an industry background that we think we could elevate to that leadership position within that area? And I think we've done a great job of doing that. So we are generally not looking to keep the seller. And I say generally because there's two types of deals that we look at. One is on a pure succession plan, which is typically what we've entered into. And the second is we would look at a private equity type situation. So if we had an individual that wanted to grow, beyond, one location, so perhaps statewide or to multiple states, and wanted both a financial and strategic partner, we could be that partner. And so that is the type of transaction that we would look at doing. And we looked at a couple of those, but again, this haven't been the right fit. And so our traditional way of acquiring these businesses has really been way of a succession plan. But we had generally not retained the seller because they, quite honestly, been looking to exit. Where can I find service reviews from your customers? Yeah, so this is not, so just so everybody understands, when we buy these businesses, we are not converting these locations into a Nova Leap brand. It's not about Nova Leap. It's very much about the people that we provide service to in the local areas. So when those folks join our business, we're inheriting the operating team, we're inheriting the caregiver staff, the client base that they're serving, and also the brand. And, with a couple of exceptions, we keep that brand. because, you know, there's a reason why we've been attracted to that business. So we have not looked at, you know, converting all of these businesses into a Nova Leap brand. Again, it's not really about us. It's more about us supporting the great people that we have in the different operations. What are the long-term objectives of the business in terms of revenue and EBITDA? I can just take you back to the map. I mean, I think that's the best way to do it. I mean, if you look at our history, we've been a very acquisitive type company. Our catalyst going forward certainly will remain acquisitions and growth. From a stock perspective, I think the catalyst is there are more people that are seeing what we have done and understanding what our plans are and what the potential exists within a company. But in terms of long-term objectives, you know, again, I mentioned a long-term plan here. We've got significant growth plans in the coming years, and so I think just take a look at the map in terms of where we've been and what the opportunity is. Next question, what's the mix of private pay? So if I understand it correctly, what this is getting at, if you look at the mix of our revenue, we'd have, you know, roughly 70-75% will be pure private pay. So that's the out-of-pocket by the seniors we provide service to or their adult children. And the other mix of that would be, so the other, call it, you know, really 15 to 25 or 20%, depending on where we are, would be a combination of veteran affairs or long-term care insurance. So that's our mix, if that's what the intention of the question is. What's the benefit of owning multiple clinics? What's your strategy to grow organically revenue? I think the benefits of owning multiple clinics are numerous. And one of it has to do with sort of scale is one. So these businesses on their own generally lack infrastructure. They don't necessarily have the right processes or technology in place to scale. We bring that. We can consolidate the back office functions around accounting, billing, and payroll. Again, overlay a consistent technology. We've taken, in one case, a manual payroll process from 4 days down to 4 hours just through implementing technology. So, you know, a lot of it has to do with continuous improvement. I think when, you know, when the leaders of these businesses in these different areas understand that it's not just them alone, that they now have a peer network, a peer group that's part of the same organization they can speak to on a regular basis, I think that's quite valuable. We can share best practices, which we do. Some of it's around hiring, some of it's around technology, some of it's around vaccine rollout right now in the different states. And so I think there's an enormous amount of benefit both at the local but also at the broader organizational level. And the second part of the question, what's your strategy to organically grow revenue? You know, there's a few different ways we can do that. You know, one's billing rate increases. So we've certainly entered into markets where we felt that, you know, maybe the current owner had rates that was below market, and we were very comfortable moving those up. So that's certainly one way to do it. The second is decrease hours. So a greater focus on marketing efforts, both in digital marketing, which traditionally has not been done at the local level, as well as the traditional marketing. Opening brand new office locations, as I mentioned, like we did in Ohio in April. That's clearly an example of organic growth where it's a pure startup location for us. So those are just some of the examples that we focus on when we're thinking about growing organically. I think that's the end of the questions I can see. Karen, it doesn't look like there's any more here. I think I've got to the end of the list that I can see in front of me.
Thank you. That concludes this webcast. Thank you, ladies and gentlemen, and have a nice day.
Thanks, everybody.